Hi, friends. Good evening, everyone. How are you all doing? This is Sachin Nachnani, and welcome back to my YouTube channel. Firstly, friends, I would like to say sorry to all of you, my subscribers, my viewers, and all my fellow traders here. I couldn't publish a video for the last two trading sessions. I got many messages, many calls, emails, WhatsApp asking me for the video, but I just couldn't make the videos as I am also engaged in many other initiatives related to stock markets. And specifically, I have been training and mentoring some people to become successful and profitable traders. That has taken up a lot of time this week, and I hope from next week, from Monday onwards, I'll be able to devote more time to sharing my views on YouTube. So with this, now let's get started with the option chain analysis for Monday, that's 3rd of August. Nifty today closed at 11,073, down by 29 points or just around 0.3%. And today was the third straight day of a fall in Nifty. In the last 3 days, Nifty has fallen by 227 points or a little over 2%. But let me put this in some context. For the entire month of July, that is from 1st July till 31st of July, that's today, Nifty has gained 771 points, that is 7.3% almost, and this is after the fall of last 3 days. Plus, in June, Nifty had gone up by 722 points. Yes, 722 points, and that's another 7 odd percent. So effectively, in the last 2 months, Nifty has risen by 1493 points. If I round it off, it is almost 1500 points in just 2 months. That is over 14.7%. So, after a rise of almost 1500 points, if you see a fall of around 50% of the gains that we have made in the last 2 months, and that's around 700 to 750 points, please don't be surprised at all. I am not trying to say that the entire fall will happen in August itself, but the gain of 1500 points in 2 months when coronavirus cases are only rising in India and across the world, geopolitical tensions, that is, tensions between India and China, US and China, are only increasing. Major part of result season is over for the June quarter, at least for the large cap names, and Nifty has already discounted too much of optimism in the sharp run up in last 2 months. So it is best to be prepared for sharp volatility, especially on the downside. Nifty futures have closed at 11,096, that is a premium of 23 points. Friends, do you see the difference here? In July, when Nifty was rising, for most of the month, Nifty futures were at a discount, and now it is at a premium, and that too over 20 points. Nifty futures normally trades at a premium, I know that, but if we can have a sharp rally when futures is at a sharp discount, then it is also possible that we can have a sharp fall even when futures is quoting at a premium. That's the only point that I'm trying to say. Here we can see that Nifty has actually turned calls heavy. Whereas if you have seen any of my videos for July, you will see that Nifty used to be puts heavy for most of the month. This is another indicator for downside moves. On the put side, highest open interest is at 11,000, followed by 10,800, and after that at 10,500. But put writers don't seem to have any strong conviction. In fact, the highest put addition has happened at 10,800, and after that at 10,400. Moreover, the quantum of put addition is not so strong. Earlier, highest put addition used to happen at 11,000 or just below the prevailing level of Nifty, but now we can see that put writers are afraid and they're spreading their bets to as low as 10,400. And look at the call side. Highest open interest on the call side is at 11,500, followed by 11,200. which is where the highest amount of open interest addition has also taken place. In fact, 11,200, 11,300 and 11,500 have almost the same quantum of calls. And in comparison to puts, the call writing across all strikes is very strong. Call writers definitely seem to have an upper hand this week at least as compared to put writers. See the conviction of call writers and compare it with that of put writers. You can see the difference. It seems that put writers simply don't have any conviction. When we look at the charts of Nifty, we can see the 3 straight days of fall, and that too on fairly strong volumes. Despite 11,000 level having the highest open interest currently, I won't be surprised to see that being broken. And I am also looking at the retest of 200-day moving average, which is around 10,850 in the coming days. Moreover, 11,300 will be a very stiff resistance for Nifty in the coming weeks. Strategy, what's going to be my strategy? Well, it will be very simple. Just sell call options. I will sell 11,300 call option, and I will even sell 11,200 call option. The premiums are fairly reasonable for both these levels, and I'll sell both these call options very aggressively. And I don't even want to take any hedge, at least on the call side, for the next few days. If and only if you're too adventurous, which in trading you shouldn't be, but if you still want to sell put options, you should look to sell 10,800 and below options only. That too only after taking a hedge. The reason I am saying 10,800 is because that is where the highest put addition has taken place, and that is just below the 200-day moving average, which is at 10,850. But if you ask me, I am not looking to sell any put options for the next few days. Now coming to Bank Nifty, it closed at 21,640, absolutely flat for today, whereas Bank Nifty futures closed at a premium of 51 points. Yes, 51 points. Bank Nifty is calls heavy like it has been for so many days even in July. On the put side, highest open interest is at 21,000 level, and then it is scattered across all levels like 20,500, 20,000. Moreover, the highest put addition has also happened at all these levels. So 21,000 as highest open interest, followed by 20,500, then at 20,000. Whereas when you look at the call side, highest open interest is at 22,500 and 23,000. Both of them have almost the same level of open interest at around 7.5 lakh shares. The highest open interest addition has happened at 22,500, and look at their conviction. Highest open interest quantum and open interest addition is higher as compared to the put option sellers. In fact, today's flat close in Bank Nifty is thanks to very good results from SBI, which was the top gainer among banking stocks from Nifty. Had SBI results been below expectations, can you imagine what would have been the condition of Bank Nifty today? Well, will SBI be again able to support Bank Nifty on Monday? Even if we assume yes, then what about other banking stocks? The entire Bank Nifty has been a very big underperformer for the last 2 months. And this is so obvious when we look at the charts. It has been way below the 200-day moving average, whereas we have seen that Nifty still is above the 200-day moving average. In fact, it is even below the 22,500 level, which could have been a decent support zone. Bank Nifty bulls have been thoroughly disappointed in the last 2 months. It just could not match the rally in Nifty. 21,000 level has turned out to be a reasonable support level in the last few instances, but can it continue to provide support to Bank Nifty even if Nifty starts falling? Well, I have my doubts. So when we come to the strategy part, since we have been seeing that Bank Nifty is so weak, and when in my view Nifty will fall further, it would be a foolish idea to sell put options over here. Let others sell put options. We may look to buy put options at the appropriate moment, but definitely not sell them for now. Even in Bank Nifty, in my view, it is sensible to sell call options. I will look to sell 22,500 call option, and also the 22,000 call option can be sold to enjoy premium decay for the next few days. So this is a simple strategy for both Nifty and Bank Nifty. Just sell call options. That's it from my end. Have a good weekend. Take care of yourself and your family. Stay home, stay safe, and gain knowledge.
Do like and share this video, subscribe to my channel and click the bell icon. You can reach out to me on Twitter, Insta, LinkedIn and of course YouTube.